Okay, so one of the questions that we are seeing a lot right now with the Fed increasing the rates and, a couple of the market changes is there a recession coming, and is the recession going to tank the real estate industry? What would you say to people to ask us that?
So it's a twofold question. Is there a recession coming? Absolutely. But a recession is not a scary thing. It is a normal part of any economy. And a recession by definition is a slowing, right? We enjoyed a few years of a booming economy. The economy is going to slow. Now, when we look at the housing market, it's fresh in people's mind from 2008, 2009 that the recession then was caused by the housing market. However, right now, all analytics say that we are not in a bubble. We are more in a boom than we are a bubble. The most recent survey that went out for the Q2 numbers from Pulsenomics and Zillow is that we're going to enjoy 4.8% appreciation year over year, and around 24% cumulative appreciation over the next 5 years. So with that, definitely not a recession in the housing market, maybe in other industries. And yeah, maybe that 401k is going to take a little bit of a tumble, but buying a house can help curb that, because if you buy a $300,000 house and it appreciates 25% over the next 5 years, that's going to more than make up for that 401k.
Absolutely. And I think that leads us to another question that people ask is, what should I be investing in? Is real estate a good investment right now?
Absolutely. Real estate's always a good investment. So as we stand today, inflation's somewhere upwards of 8%, and our interest rates are in the mid fives. Okay. So that's negative 2.5%. And that means that you're paying less for your mortgage than what the inflation is charging you for every other household good. So with that, it is definitely a good investment that's going to continue to keep you under the current inflation rate. And people say, well, what happens when inflation drops? And then I'm at 5.5. Well, then we refinance you and we keep you under that, so that you're continuing to stay under that inflationary number and continue to have your money in a good spot.
And I know you've touched on this before with me, is if they have equity in the home, they can technically refinance, right, without any actual cash into it. So they can use their equity to do that. Is that correct?
Absolutely. So with that appreciation, if we're doing a rate and term refinance, no money generally is needed at the closing table, as well as because of the rapid appreciation we've seen here in Texas over the last few years. People who bought their house a year, 18 months ago are seeing $100,000 in equity in their home. As their house goes up in value, so do their property taxes. So now that payment went up, or they've acquired more debt because they couldn't pay off that credit card because they had the bigger mortgage payment. What we're doing right now with people is doing a cash out refinance with them and consolidating their debt down. Yeah, your mortgage might go up $400 a month, but we're going to wipe out about $1,500 worth of your current liabilities. So your monthly outgoing is going to be significantly lower, and it's going to help you stay above water.
And you only have to remember one payment.
And you only have to remember one payment, absolutely.
I'm all about that.
Yeah, absolutely. Convenience.
So you touched on something as well, like what is a rate and term loan?
Yeah, so a rate and term refinance is simply refinancing your existing principal balance to a lower interest rate. It's a really good opportunity for the future. We see an opportunity for that in around 18 to 24 months because of the pending recession that we're about to be in. You get into it now, you enjoy that appreciation and gain that equity in your home, and then we'll rate and term refinance you in that time period. So it's still a great time to buy.
Because the properties are still going to go up in value. We have some people ask and say, well, they're going to keep going and then it's going to crash. But what you're highlighting is don't miss out on the fact that we still have some increase and some appreciation that's coming. So, all the indicators are showing, what was it you said, 4.5%?
4.8% is what they're estimating. And in Texas, when we're talking about these numbers and we're looking at nationwide appreciation versus Texas, right? Through COVID, a lot of companies moved into the DFW area, the Weatherford area, all over the state, and with that brought their employees with them. So while we look to enjoy 4.8% nationwide, we may even see that higher in Texas. And then in the future, if we do see a decline in housing prices nationwide, more likely than not, in Texas, we're going to keep seeing appreciation, or at least a flat level, so not a dip in that value.
Yeah, that makes sense, because I know we have realtor friends across the nation, and Ohio is seeing a little bit of a dip. They're seeing less appreciation right now, but Texas is having so much growth.
Absolutely.
We're not seeing that. I want to say the Texas Association of Realtors just put out their first quarter reports, and we're 21.5% up on last year.
Absolutely.
So that's a huge jump for all of our awesome clients who jumped on it and bought last year.
Yeah.
21.5% increase is a big deal for, you know, just owning your home.
21.5%. If you're buying a $200,000 house, it's then worth $240,000 in 1 year. You have to ask yourself, can I, of my own, you know, willpower, save up $41,000, $42,000 in 1 year, or just let your house do the work for you? You're living in it, you're making that principal and interest payment, and you're gaining net worth. Absolutely.
And what would you say to someone that is renting right now and they're like, you know, I have this great house, my rent payment is $2,800 a month, which sounds super high, but it's really not high for our area.
Right.
What would you say to someone that's in that situation that calls you and says, you know, my rent's $2,800 a month, I can't afford a mortgage?
More likely than not, if your rent's $2,800 a month, we're going to actually get you into a mortgage that's lower than that. And then the conversation I have with people all the time is, you're paying $2,800 a month in rent, and then let's say your mortgage is going to be $3,100. Okay, well, at $2,800 a month in rent, you might as well light that money on fire because it's going. You're getting nothing for it. Would you rather get nothing for $2,800, or would you rather gain net worth and be in a significantly better position over time for an extra $300 a month? There's really no comparison. There's no question whether that's a good idea.
Good move or not.
Yeah.
And I did see a quote the other day is, you know, $2,800 a month for rent, you're probably paying your landlord's mortgage.
Absolutely.
I mean, most of them don't own these rental properties outright. They're leveraging those so that they can cash them out and go purchase something else. So
absolutely,
you're technically already paying somebody else's.
Yeah, and their mortgage is probably, if you're paying $2,800 in rent, they're probably $2,300, $2,400 on their mortgage. They're going to make money. They're not going to just do it out of the goodness of their heart, right? They're business people, right? So if you're paying $2,800, their mortgage is less than that, and you should get into that boat and get your own mortgage.
Absolutely. Okay, so we covered